the biggest challenge today is the weekly uncertainty. For companies to rewire their supply chains, they need to know what the long-term stable supply chain outlook looks like. So right now, what we're witnessing is on a particular week, we have a 61% decline from China to US. Then next week, you see some announcements, there's a bounce back of 70%. And that's happening across India, Southeast Asia, even, countries like Turkey, Latin America. So the only thing which we are doing is we are saying that this short-term volatility would continue, and it is definitely impacting the trade. But we ask our offices globally to be prepared for ramp up and ramp down. From a long-term perspective, I believe, depending on where the tariffs finally land, there would be some degree of, reconfiguration, maybe some business moving out of China into some other countries, etc. However, in the short term, this volatility would definitely have somewhat negative impact on the trade. And if it was, we look at growth of about 6% globally, my sense is that, for the next 3 to 4 months, the growth could be more around 3%. The jury estimated to be coming down to about 1 and even -1, but I think now the recent concessions announced by Trump for 90 days have, given some life. So I believe the trade may be not negative, but, not to its potential growth.
Understood. When you look at the leading indicators, Ravi, when you look under the hood in your business and talk to your colleagues, is there anything in the numbers that are consistent with recessionary activity in shipping?
So our biggest lead indicator is the bookings that we receive for cargo flowing in. And there was a significant decline in the first, couple of weeks of April, particularly for the cargo into US. But like I said, some announcements later, we saw a quick rebound as well. So now on a month-on-month basis, April on the back of March bookings was actually positive. And May is also now recovering very rapidly with almost 70% week-on-week growth for our business to US from China last week. So I think, at this point in time, it's kind of bouncing back and the fear is a little reduced, I would say.
Interesting. Ravi, Europe's a big market for you. You're very internationally exposed. What are the trade flows telling you to the European market, given this headline uncertainty as it applies to the tariff, as it applies to the US tariff regime towards the EU, which really seems to be stop-start, doesn't it?
Yeah, so I would say, not just the last couple of months, but even if you look at the last 4 to 6 quarters, Europe has been quite subdued for us and for, the economies have not been performing that well. The demand has been much weaker. And recently with the tariff announcements, even exports out of Europe went down. So Europe definitely has been in a bit of a stress. And for Europe to recover, we'll have to see a settled tariff environment and reduce interest rates, helping consumption in European Union, which can possibly drive the economy back. But at this point in time, I would say it remains subdued.
And Allcargo ships everything from consumer durables to auto parts. Can you give us a blow-by-blow account, Ravi, on how those verticals are performing? And to the point of advance ordering ahead of tariffs, has that played itself out? Has that peaked?
Yeah. So on the domestic business, we focus on consumer verticals because we offer solutions tailored to these specific industry requirements. But on the international business, as a neutral LCL operator, we are almost commodity agnostic. So we focus more on the trade lane. So we would not have very specific view on certain commodity trends. But I would say that, the auto components at large seem to be doing okay. There's a lot of supplies moving on account of electric vehicles. So we have seen a lot of growth coming in select markets. Like we have seen expansion in Latin America for us on the back of our initiatives as well. So overall, I think the conventional large contributors, like, if you look at textile, there were possibly some shifts. Some of the Indian businesses perhaps benefited last couple of months. But on the larger overall trade, the environment remains subdued. The imports into Europe, which are more, consumer electronics, apparel, and, the general consumer items, they have been subdued. So that's what one could make on the commodity trend broadly.
And Prime Minister Modi is pursuing what could culminate in a triple crown event of trade deals. UK, India is already in the bag. EU and the US are waiting in the wings. This could create some significant momentum over time in terms of trade flows into and out of India. What does it mean ultimately then for the Allcargo business?
Absolutely, Prime Minister Modi and his government have been doing a remarkable job over the last 11 years. Only in a couple of days back, India overtook Japan to become the fourth largest economy. And what we see is a lot of on-ground initiatives to promote industry, the way the toy industry has been completely turned around with being a Chinese import-driven industry to an export industry. The manufacturing of iPhones and consumer electronics in India has taken a significant, U-turn from being again a complete importing 11 years ago to now a huge exporter. So what we are seeing is we are seeing that this is leading to two things. One, there's a lot of manufacturing-led supply chain demand, which means for all cargo in our domestic business, we see requirement for increased warehousing, increased transportation. And on the international business, India, of course, is the fastest growing market for us and also one of the biggest markets. So from our perspective, we have a significant market share in India. So while our global market share in the international LCL is roughly about 13-14%, our India market share is almost double of that. So any shift from anywhere into India definitely benefits all cargo. And on the domestic business, amazing opportunities ahead.
And the plan, Ravi, ultimately is to separate the Indian and the international business. Can you give us a sense and an update of where you are on that restructuring program?
So we are, segregating businesses to make them strategically independent and also create the financial flexibility. We are at the near conclusion of that process with a final NCLT hearing coming up in the first week of July. We believe that in the coming months, we could potentially bring the scheme to conclusion. And post that, it allows us to, have two specific independently listed companies. So all the holding structure inefficiencies could be eliminated.
And how close are you, would you say, to a listing of the international business? When could that happen?
So the listing of international business is an automatic event which happens on the demerger, the way Indian regulatory environment operates. So let's say in the coming months, as the international business gets demerged, it would automatically get listed. It would be a mirror demerger with all the shareholders of Allcargo getting one equity share in the new international business listed entity for the one share that they hold in Allcargo today.